Well, I think as we look to 2018, we're expecting to see another year of reasonably robust activity overall. When we look to Europe, clearly there's a huge weight of money going into things like logistics in particular, and we expect that to lead to falling yields and rising rental levels as well from an occupational perspective. In the UK, I think it's clearly unsettled politically, but actually one of the dangers that we see is that people are underestimating the different pools of capital that are focusing on the market. And so we see a vast number of different types of investors still very keen on the UK. And we think as they deploy their capital over the next year, that will lead to another year of reasonably strong activity as well. Generally, the way we think the market's going to pan out next year is that there will be an increase in the number of corporate transactions that take place. We've seen some this year, and we think they're very attractive for buyers for a number of reasons, particularly as a way to get scale in a market where actually it's often quite hard to assemble portfolios on an individual asset basis. So we think that's going to be a feature of the market in 2018. Sector-wise, I think clearly there has been a focus on industrial, and we don't see that changing. Really, the occupational drivers on the logistics side are very strong indeed, and that's probably one of the key areas where we expect to see some rental growth in 2018 and therefore a bit of capital appreciation as well. The rest of the country, it's a bit more of a mixed bag. We do see strong opportunities for regional property, particularly on the office side, where actually there isn't a lot of stock in a number of the regional cities, and demand has been pretty strong. And then one of the areas that is getting much more attention these days is the alternative property types, and we noted that these kind of transactions accounted for about a third of all investment activity in the market this year, and we think that kind of activity is going to stay very, very prominent as we go into 2018 as well.